Ever come across the term inverted hammer in trading and wondered what it is? Well, let's unravel this mystery. The inverted hammer is a concept in trading, specifically a bullish pattern that's seen on candlestick charts. Picture this. You're looking at a candlestick and you notice it has a long upper wick and a short lower wick. This, my friends, is the inverted hammer. Now, why is it significant? It's all about the tug of war happening in the market. This pattern indicates a buying pressure, but don't be fooled into thinking it's all smooth sailing. The inverted hammer also shows that there was a selling pressure, but it wasn't strong enough to drive the market price down. In other words, the buyers are starting to flex their muscles. So when you spot an inverted hammer, you're seeing a battle between buyers and sellers, with buyers gaining an upper hand. Now let's delve into the characteristics of an inverted hammer. The inverted hammer, a bullish pattern in candlestick charting, is fascinating. It tells a tale of a battle between buyers and sellers in a trading period. Picture this. The market opens, sellers push the price down, but buyers surge in, driving the price up again. This struggle is reflected in the long upper wick of the inverted hammer. The upper wick, sometimes referred to as a shadow, is the result of buyers pushing prices up during a trading period. It's a sign of their strength and determination. But don't be fooled, the sellers aren't completely out of the picture. They make a comeback, albeit a weak one, pulling the price down a bit. This is represented by the short lower wick. Now, you may be wondering about the body of the candle. Well, it can be any color really. Whether it's filled or hollow, black or white, doesn't change the underlying story. It's still a saga of buyers making a stand, indicating a potential change in the market's direction. But remember, while the inverted hammer is a strong indicator, it's not a guarantee. It's one piece of the puzzle, a clue to be used in conjunction with other indicators for the best results. Essentially, the inverted hammer represents a reversal pattern, signaling that the buyers are stepping in. Understanding the inverted hammer is one thing, but knowing its significance in trading is another. Now that we've delved into what an inverted hammer is and its key characteristics, let's talk about why it matters. The inverted hammer is like a beacon in the night, signaling that a potential price reversal could be on the horizon. It's a bullish pattern that suggests the tide may be about to turn, with the bears losing their grip and the bulls ready to charge. What makes the inverted hammer particularly interesting is its ability to indicate a good time to buy. Imagine you're a sailor at sea and the inverted hammer is your North Star, guiding you towards potentially profitable trades. But just as you wouldn't set sail in a storm without checking the weather forecast, you wouldn't want to make a trade based solely on the appearance of an inverted hammer. This is where the concept of a confirmation candle comes into play. A confirmation candle is essentially a green light that says, yes, the inverted hammer was right, the price is likely to rise. It's the extra assurance that can help you navigate the often turbulent waters of the trading world with more confidence. In a nutshell, the inverted hammer indicates that the buyers are about to take control, giving you a hint to make your move. It's like a secret code in the world of trading, helping you decipher when it might be time to dive in and when it's best to sit back and wait.